Yeah, there's so much happening. I mean, since I've been in payments, there hasn't been a period that we've seen so much change. So if we would pick a couple of trends, first, of course, the shift to digital. So the last year during the pandemic, we have seen an increase in growth in e-commerce that's comparable to the whole, say, the 5 years before that. So a massive shift to digital. So, and that puts a lot of strain on the banks to meet merchant demand for, faster payments, frictionless payments through all kind of channels, through all kind of currencies, through uh, all kind of payment methods that clients require to make the payments as easy as possible. So for banks to basically manage that digital transformation is quite a challenge by itself. But the other trend that we have to highlight here is open banking and embedded finance. So that's how, with APIs, basically this whole value chain is being recreated. So while in the past banks were delivering everything from start to finish, so produce your own services and then also distribute them yourself to your end customer through some one-way street. Now you see that these ecosystems are being developed where banks are partnering with enterprises, with fintechs to create this kind of a new value chains. And what you see is that enterprises make use of that by integrating banking services into their customer journeys. The payments opportunity alone for embedded finance is worth, by 2025, they expect it to grow to 140 billion. So, and it's not new, right? So embedded finance is been around for ages. So if you are on an airline website, they're going to ask you, do you want to have a travel insurance? So there's a form of already embedded finance, but it's so much more simplified by APIs, because it's more easy to integrate between an enterprise and a banking service. So that banks delivering banking as a service to corporations and fintechs. Maybe looking forward, what I think is going to be a big thing is crypto. I just also heard in Las Vegas in Money 2020 now that is a very hot topic. So people there tend to agree with me. So probably crypto is going to be accepted by merchants within the foreseeable future. Merchants basically want to offer the payment methods that their customers are used to. So cards, of course, was the first payment method that's been used, but now we see many others, like these account-to-account payment methods that we see everywhere popping up around the world. Netherlands with Ideal, in Finland, in Poland, some other markets around the world where you see new payment methods being accepted. From a merchant perspective, these payment methods are sometimes faster, so you get the money faster, you would get with cards. Stuff like they are cheaper because they're using, let's say, a cheaper payment rail, and they're also final. So the payment's going to be pre-authenticated, so the transaction, when it reaches the merchant, is going to be final. It's going to be no chargeback, so it operationally more easy to manage. And I think cryptocurrencies has all these characteristics, right? It's real time, it's cheap, and it is irrevocable. So from a merchant perspective, that is a really good payment instrument to use. And if you see this adoption growing at the consumer base, so we get kind of ubiquity that the payment method needs, those two will eventually connect, and we think they will start accepting it. Of course, it's a bit because of the volatility of these currencies. There's still some anger, some risk around it. But I think that we are at the brink of making that transition. So definitely on my research program for next year to look at this.